I've been watching what's happening between the United States and Iran, and I have to tell you, it's got me concerned. Really concerned. Not just because of the humanitarian aspects, which are obviously troubling, but because of what this could mean for your money, for your investments, for everything you've worked so hard to build. I'm 94 years old now, and I've lived through a lot of geopolitical crises. I've seen wars, conflicts, tensions that seemed like they would tear the world apart. And every single time, the markets react. Sometimes they overreact, sometimes they underreact, but they always react. And right now, with Trump making threats about military intervention if Iran continues to crack down on protesters, we're sitting on a powder keg. And most people, most investors, they're not prepared for what could happen next. See, here's what's happening. Trump just went on social media and basically drew a red line. He said if Iran continues to use force against peaceful protesters, the United States will intervene. He said American forces are in a full state of war readiness. Now, whether you think that's the right policy or the wrong policy, that's not my concern here. My concern is what this means for markets, for oil prices, for your portfolio. Because if this escalates, and there's a real possibility it could, we're looking at potential disruptions that could send shockwaves through the global economy. And the investors who aren't prepared, the ones who are fully invested with no cash reserves, no defensive positions, they're going to get hurt. Badly. Let me tell you what I'm seeing right now. And then I'll tell you exactly what you should be doing to protect yourself and maybe even profit from this situation. First, oil. This is the big one. Iran sits right on the Strait of Hormuz. You know what that is? It's a narrow waterway that about 20% of the world's oil passes through every single day. If there's a military conflict with Iran, that strait could be threatened, could be blocked, could become a war zone. And what happens to oil prices when 20% of global supply is at risk? They skyrocket. We've seen this before. In 1973, during the Arab oil embargo, oil prices quadrupled in just a few months. In 1990, when Iraq invaded Kuwait, oil went from $20 a barrel to $40 in a matter of weeks. And in 2008, when there were tensions with Iran over their nuclear program, oil hit $147 a barrel. Right now, oil is trading around $70 to $75 a barrel. If this Iran situation escalates into actual military conflict, we could easily see oil at $100, $120, maybe even $150 a barrel. And you know what that means? It means gasoline prices go up. It means heating costs go up. It means transportation costs go up. That IT means inflation, real inflation, not the kind we've been dealing with, but the kind that actually hurts the average person's ability to afford basic necessities. And when inflation spikes like that, the Federal Reserve has a problem. They either keep interest rates high to fight inflation, which slows the economy and hurts stocks, or they cut rates to support the economy, which lets inflation run wild and hurts everyone's purchasing power. Either way, it's bad for most investors. But here's the thing, and this is important. Oil price spikes are temporary. They always have been. Even when oil hit $147 in 2008, it crashed back down within a few months. Why? Because high oil prices destroy demand. People drive less, they conserve energy, companies find alternatives, and eventually the price comes back down. And then 6 months later, when things have calmed down and the market has recovered, they'll be sitting in cash, having missed the recovery, having turned a temporary decline into a permanent loss. That I've been through this so many times. In 1990, when Iraq invaded Kuwait, the market dropped about 17%. Everyone was panicking. Everyone was selling. And I was buying. I bought companies that had nothing to do with the Middle East, companies that would be just fine whether there was a war or not. And when the Gulf War ended quickly and the market recovered, those investments made me a fortune. The same thing happened after September 11th. The market closed for a week, and when it reopened, it dropped sharply. Everyone was scared, and I bought, and I made money. Not because I was smarter than everyone else, but because I understood that temporary geopolitical crises create temporary market dislocations, and those dislocations are opportunities if you have cash and courage. So, here's what you need to understand about the current situation. If the Iran crisis escalates, your portfolio will probably go down. And that's okay. That's normal. That's temporary. The question is, are you prepared? Do you have cash to deploy when great companies go on sale? Or are you fully invested, sitting there watching helplessly as your net worth declines? See, this is why I always keep cash. Always. At Berkshire Hathaway, we typically hold somewhere between $20 and $150 billion in cash. People think that's crazy. They say we're losing money to inflation. But we're not losing money. We're staying flexible. We're staying ready. Ready for opportunities like this. Let me tell you specifically what sectors are going to be most affected if this escalates. Defense contractors, they're going to benefit. Companies like Lockheed Martin, Raytheon, Northrop Grumman. If there's a military conflict, defense spending goes up. These companies get more contracts, their stock prices go up. I'm not necessarily recommending you buy them. I'm just telling you that's how it works. Energy companies, as I mentioned, they'll benefit from higher oil prices in the short term. But again, it's temporary. Airlines, they're going to get crushed. Higher oil prices mean higher jet fuel costs, which destroys their profit margins. Consumer discretionary companies, they'll struggle because when people are paying more for gas and heating, they have less money to spend on other things. Banks, they could go either way. If interest rates stay high, that's good for their lending margins. But if the economy slows down because of high energy prices, loan defaults could increase. Technology companies, most of them will be fine long term, but they'll sell off in the short term just because everything sells off during crisis. Now, here's what I want you to do. I want you to take a hard look at your portfolio right now, before anything happens, before the crisis escalates. And I want you to ask yourself a few questions. Question 1, how much cash do I have? If you're fully invested, if you have no cash reserves beyond your emergency fund, you're too exposed. You need to raise some cash. How much? That depends on your situation, but I'd say at least 10 to 20% of your investable assets should be in cash right now. Not because you're trying to time the market, but because you want to be ready to act if opportunities arise. Sell some of your winners, the stocks that have run up a lot, the ones where you've made good profits. Take some of that profit off the table and put it in cash. Question 2, what companies do I own? Are they companies that will be seriously affected by an Iran crisis? Or are they companies that will be fine regardless? You need more bonds, more cash, less exposure to volatile stocks. Now, let me tell you what I'm doing, what I'm thinking about doing if this situation escalates. I'm not making any dramatic moves right now. I'm not selling everything and going to cash. That would be stupid. But I am watching. I'm watching oil prices. I'm watching the news out of Iran. I'm watching Trump's statements. And I'm keeping my cash reserves ready. If this crisis does escalate, if there's military action, if the market sells off 15 or 20%, I will deploy that cash. I'll buy companies that I know are undervalued, companies that are selling cheap just because of panic, not because of fundamentals. Companies like Apple, if it drops enough. Companies like American Express, if the price is right. Companies with strong brands, strong competitive positions. Companies that will be just fine 5 years from now regardless of what happens with Iran. That's the strategy. Stay calm, stay patient, keep cash ready, and act when everyone else is panicking. But here's the key. You can only do this if you're prepared. If you're not prepared, if you're fully invested, if you have no cash, then when the crisis hits, you're just along for the ride. You're just watching your portfolio go down with no ability to take advantage of the opportunities. Let me also talk about the worst case scenario, because you need to think about this. What if this really blows up? What if there's a full-scale war between the United States and Iran? What would that mean? Well, it would mean sustained high oil prices, probably $120 to $150 a barrel for an extended period. It would mean significant disruption to global trade, not just oil, but shipping routes, supply chains. It would mean heightened tensions with Russia and China, who are Iran's allies. It could mean a broader Middle East conflict if other countries get involved. In that scenario, we're looking at a potential recession. High oil prices would slam consumer spending. Uncertainty would freeze business investment. The stock market could drop 30 or 40%. Now, is that likely? I don't think so. I think cooler heads will prevail. I think the economic consequences are so severe that leaders on all sides will find a way to de-escalate. But it's possible. And you need to at least consider the possibility. If that worst-case scenario happens, the companies that will survive and thrive are the ones with no debt, high cash reserves, and essential products. The companies that will get destroyed are the ones with high debt, cyclical businesses, and discretionary products. So, go through your portfolio. Look at each company's balance sheet. How much debt do they have? How much cash? Can they survive a prolonged downturn? If the answer is no, or if you're not sure, consider reducing that position. Now, I also want to talk about opportunities because it's not all doom and gloom. Crises create opportunities. They always have. If oil prices spike, there will be renewed interest in alternative energy, in electric vehicles, and energy efficiency. Companies working on these technologies could benefit long term. If there's conflict in the Middle East, there will be increased focus on domestic energy production in the United States. Oil and gas companies with reserves in safe, stable regions could do very well. If inflation spikes because of high oil prices, companies that can pass those costs on to customers, companies with pricing power, will protect your purchasing power. These are companies like Costco, like Visa, like the railroads. They have such strong competitive positions that they can raise prices when their costs go up. And here's something else to think about. If this crisis leads to a recession, if the market crashes 20 or 30%, that's when the greatest fortunes are made, not lost made. Every major crisis in history has been followed by incredible bull markets. The people who bought during the 2008 financial crisis made a fortune. The people who bought after September 11th made a fortune. The people who bought during the COVID crash in 2020 made a fortune. But they could only do that because they had cash, because they had the courage to act when everyone else was scared, because they understood that temporary crises create temporary dislocations, and those dislocations are opportunities. So, that's my advice to you. Don't panic. Don't sell everything. But do take this seriously. Do prepare. Raise some cash. Review your portfolio. Make sure you own quality companies that can weather a storm. Make sure you're not overexposed to sectors that will be hit hard by an Iran crisis. And then wait. Watch. Be patient. If this crisis fizzles out, if cooler heads prevail, then you're fine. You've got cash, you've got quality companies, and you're positioned for long-term growth. But if this crisis escalates, if we do see military conflict, if the market does crash, then you're ready. You can act while everyone else is frozen with fear. You can buy great companies at great prices. You can turn crisis into opportunity. That's how you build real wealth. Not by avoiding risk entirely, but by being prepared for it. By having the resources and the mindset to act when everyone else can't. I've been doing this for 75 years, and this is the playbook. It works. It's worked through every crisis, every war, every market crash. The investors who survive and thrive are the ones who prepare, who stay calm, who keep cash ready, and who have the courage to act when the time is right. So, prepare yourself. This Iran situation, it might blow over. It might not. But either way, you want to be ready. You want to be positioned not just to survive, but to thrive, to take advantage, to come out the other side wealthier and stronger than you went in. That's the goal. That's always the goal. And if you follow this advice, if you prepare now, you'll be ready for whatever comes next. I promise you that.